Greetings, Dr. Jeffrey Scott. This is my weekend market update for April 30th, 2023. I titled this one Fed on Deck, Earnings in Batter's Box, and Market at Key Resistance Area. My email address is htsidoc@gmail.com. I am doing this remotely, so my technology may not be the same as it is when I'm back home in Florida. And I think we're going to have a great, crazy week with lots of volatility on tap. Let's take a look at my slides. So, starting disclaimer, this is for educational purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I am independent. I pay for the tools that I use, and trading involves risk, and you are solely responsible for any investment decisions you make. If you are watching this for the first time, please hit the subscribe button. I don't get any money for these. I don't have enough followers. But if I have enough people hit the subscribe, hit a thumbs up, then maybe YouTube will actually promote me besides the small number of people who know who I am. And that would be much appreciated and not cost you anything. If you like these videos, I do a much shorter video most mornings at stocksanddocs.com, and I welcome you to come here. And if you fill out that little box at the lower right-hand corner there, when you go to the site, you'll get notification when I do these. Major markets told the story. The Qs were up, the most at 1.9, and the composite was up 1.3. The rest, Dow up 0.9, S&P up 0.9, and then the Russell down minus 1.3. But notice the Russell had a strong day on Friday. So the markets were clearly mixed. I think the most impressive thing here was Friday was a super strong day, as was Thursday. And then when you look over here at the distance from the 52-week low date, look at the Qs, 26.9. Spiders approaching a new bull at 19.5. The NASDAQ at 21.0. The diamonds up 19%. Are we on the verge of a new bull? Or is this going to be a bull trap of mega proportions? We'll see. You can see the breakdown of the sectors, and you can see technology, communications, and interestingly, real estate up on the week. The Q tells the story of the market. This is the Q edge. So I'll come back to the buckets on a different view, but if you look at the advances, sectors up 91%, industry 87, stocks 75%, that was Friday. That is a super strong day, with the only sector being down the defensive utilities. When you look at 2 days, the numbers are even greater, 100, 95, and 86. But when you look at 5 days, it was a 50-50 week. So if you're that strong on Thursday and Friday, well, pretty much for sure you had some lumpiness in the beginning of the week. You look over 10 days, same thing, a 50-50. But we're still having a good month, or April was a good month. Not surprised, it's always one of the strongest months in the market. Having a little bit of issues today getting this thing to advance. Our easing rates tell us something in the setting of the Fed tightening. Look at the 10-year and the 30-year actually inch down going into a Fed meeting. What about a recession? Do we have one in our near future? Well, those who've been here know that I pay attention to these 4 boxes. If you look at the 10-2 and the 10-3 yield curve inversion, every time you invert, and we're going back to the 90s, what happens when you come back out of that? Gray bar, gray bar, gray bar. That's a recession. What happened? Here's a 10-2, gray bar, gray bar, gray bar. So, odds favor, especially with such a deep inversion, that we've got a recession coming. I know that's highly debated. If we look at the credit tightness, we haven't gotten to 2020 rates. We're kind of elevated where we were between 16 and 20, but we're well below what you'd expect to see if credit was getting tight, although we'll watch that closely. And if you look at the FRED, Philadelphia Reserve District 3 Diffusion Index, again, when it drops, you get recessions. Now, when it drops to this first line at minus 20, no, you can't avoid a recession. But there has not been, going back to the 70s, a drop below minus 20 on this index, not followed by a recession. And where are we at today? We're at a minus 30. So I think we have reason to think that we could have or will have a recession in our future. Breadth mixed on the week. And I think this tells the best story. I took my 2121, which is up, the new high, new low, 13-week. I said, what about on the daily? On the daily, it actually got oversold in the beginning of the week. Stocks above the 200 down a bit, stocks above the 40 up a bit. So a little bit improvement, but still mostly mixed. Current buckets, tells a story of the market. 50-50, stocks above the Bollinger Band midline and the S&P 1500 stocks below. Then you have outperformers here, stocks above their bands, and then most of the stocks are sitting here below. So this is not a market where everybody's moving together. This is a market that is mixed at best. Now, when I look at the Hindi analysis, I'm not expecting a Hindenburg omen here. Heck no. What I'm expecting is to start to see new highs. And look at the NASDAQ. Despite being up on the week, there's a lot of new lows rather. On Wednesday, we had 10% new lows. On Tuesday, 12.7. So we had a nice bounce. Where are the highs? Where are the highs? On the NYSE, not so bad. The new lows have gotten less, and we are starting to see new highs. So a split market. So talk about split. This is the ERG analysis where I look at the stocks, look at their EPS rank, relative strength rank, and group rank, and I try and stratify them for those that outperformed, underperformed. And stocks at low to moderate ERG outperformed massively, and then stocks at the top outperformed. The rest kind of did nothing. When you look at EPS rank, so when you go up, it's a better performance. To the right, better EPS. Stocks without much earnings did better. When you look at relative strength, stocks with poor and stocks with great did well. Everything else was negative. What a bizarre week. And you could see over here on from HDSI, the group performance report, that it was a mixed week. The S&P was up a bit, Friday to Friday. The Canaries were up. All right. Market Smith was kind of flat. IBD 85 flat. And the IBD 50 growth type stocks were actually down 1.25%. But the IBD 50 is not the FANG, it's small cap growth. Know your news and earnings. What a massive news and earnings week we have coming. PMIs on Monday, Tuesday, job openings, Wednesday, ADP employment, PMI, ISM. Oh yeah, we got the Fed with a statement coming out on Wednesday at 2 o'clock, followed by a Powell conference. Thursday, we got jobless claims. And Friday, the monthly unemployment report. Put on your seatbelts, folks. We are sitting at an area of where the market's going to make a decision. Is it time to break out and go much higher? Or was this a bull trap and are we coming back to retest lows? Here's the earnings, lots of them too. So judgment call to hold stocks over earnings dates, bad judgment to not know when your stock's earnings date is scheduled. So my thoughts, big cap tech led the market higher with the QQQs and NASDAQ leading. The week is another big one for earnings and news with the all-important Fed meeting and press conference. Major markets are either at or above near-term resistance. Will this be a bull trap or a breakout back to former highs? Risk seems a bit more balanced this week, but with the news flows and the Fed, I think I'm going to be cautious going into Powell and the press conference. I keep certain things in the back of my head. First, historical comparisons suggest we have a recession coming. Second, markets typically have a leg down when the Fed announces a pivot. Third, bear markets in a recession usually drop much more than we've seen here. And fourth, markets do not rally until after rates start getting cut. And now, although this one is not market related, a fifth one is dry heat is still heat. Stagecoach in 107 degrees in the desert, even though the humidity is probably zero, is still freaking hot, and that's where I spent this weekend. And last, to newbies, I have never in my life been considered a perma bear. So this is a bullish guy actually feeling and acting kind of bearish here. So let's take a look at the charts. And all right, so I don't usually look at TradeStation here, and I don't really want to go into all the indicators, but I am going to comment on a couple of things. I kind of like auto-written trend lines. Why? Because trend lines, I think, are very subjective. So notice the spiders here have gone into trend line, closed a bit above it. and the Qs have taken out the trend line, and the diamonds have taken out the trend line, and the Russell is lagging. You also might notice here on the dots that you're in a squeeze in the spiders and actually had a PSAR reversal and a kahuna, a squeeze on the Qs, and a squeeze on the Russell. So that, if I want to be a super bull, rah, 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 we're breaking out, we're going to new highs. Just not there, especially with the news this week. What I want to see and what my concern has to be, are we going off to new highs, or are we going to see, I didn't want to move that, did I? Put that back down there. Are we going to see, I guess it's that, up and down, up and down. And one thing that I've learned in this market is that false breakouts by themselves are very strong signals and not necessarily a positive signal. Just look at the Russell, how it was in a Darvas box for a prolonged period of time, and then it had a breakdown after a false breakout, and that sort of kicked off the market fall that we saw in 2022. All right, top-down indices, looking at hot stocks. Qs, when you start to see the indexes at the top, especially the cap-weighted one of the Q and FANG, you start to think that this is not a healthy market. I'm typically seeing sectors up at the top. I'm seeing, ETFs of certain type themes like home building. Here's the Q, that's the leader, that's cap weighted, and I think that is potentially not the greatest thing, but we shall see. Look at the indices. We'll start here with the spiders. And again, we can go all the way back and look at this trend line here, which formed at the high in early January of 2022. Multiple failures. Here's our successful retest. That's a bullish thing in my mind. A run up this trend line. Now, I'd like to see us get back above that trend line. We're above the 50, which held as support, above the 200. We'll see if the MACD doesn't flip around positive again. And look at these two bars. Two very strong bars after two very weak bars and a doji. I have to be more bullish than bearish looking at that chart, but let's just hope this trend line doesn't act as resistance and we have a false break here above these recent highs. Notice where this line is going, and now let's look back here. We have failed in this area before multiple times, so got to be a little careful here, but more bullish than bearish. Look at the Qs. Fresh move up, took out the recent highs. The diamonds took out the recent highs on the close, all of them closing at the high of the day. Even the Russell, which came back down and retested this line, bounced again. But you notice 50 and 200 trending up, at least on the first two, sideways on the diamonds, and 50 above the 200. When you look at the Russell, it's the opposite. That has to be somewhat concerning. VIX was down on the week, and the dollar really just trading sideways in a trading range here. Next, I look at the commodities, and the commodities dollar in a trading range, so's gold and so's silver. This could be a flag. And when you look at monthly charts going back a long time, you're seeing that you are not below record highs going back 10, 20 years on gold at least. Oil sort of sideways. This big gap up on the OPEC tightening has sort of resolved some. I think the fact that should question the economy. Natural gas, I don't know. I keep waiting to see if natural gas is going to move. It was up a bit on Friday, up a bit on Thursday, but down much on Tuesday and on Tuesday and Wednesday. TNX should be showing up here. Let me try that again. The 10-year, right there. All right, so sometimes I notice on Sunday mornings that the Tasty Trade feed's not coming here. We already looked at it and showed that it came down a bit on the week when I showed my presentation. Weekly market signals, looking for two things. I'm looking for price above the 30-week WMA, and I'm looking for a green bongo. The spider, the Qs, the diamonds were all up on the week, and they all remain in a positive buy mode. And you could see the Russell remains below the WMA with a red bongo. If we look at breadth, TLT versus SPY came down. That's probably a positive thing. But you still have the issue here for the most part where the markets are favoring the cap-weighted spider and Qs at the expense of the equal-weighted comparators. Qs outperforming IWM, and the IBD 50, the small cap growth, lagging the FANGs. If we look at the hourly sectors, take a second, look at communications off the mat. We talked about that after we saw the Meta earnings overnight, that I thought we would see a big improvement there, and we did. Looking across the rest of them to see if we have any other good signals. Technology is trying to figure out what it wants to do. Staples, which was up last weekend, came down some, as did utilities, so the defensives weakened, and healthcare came down as well. But I think we might be seeing something different happening now with biotech. If we look at the heat map on the market on the S&P 500, you could see a lot of green on Friday and what was a strong day. Amazon was down after its earnings, disappointed, especially around AWS growth. We're going to come back to WIN in a few minutes. On the wealth scanner, looking at strength, again, this is different than the hot stocks because the wealth scanner is going to really look at things that like relative strength, and it's not requiring a big move over the last few minutes. It's going to look at relative strength over a period of time, unless like the hot stocks, which is more imminent. You can see staples, which were a little higher last week, still up there. That's interesting. But again, you see the longer term response on the wealth score, which takes longer to fall, versus the quick move in the hourly ratio charts. Q's up here, construction still up here, but it's come down. Dividends, home builders, high yield. It's an interesting mix, and again, I like it a lot more when I have things above 800, 850, and I have sectors and smaller ETFs, not industries like the Qs, sitting up near the top. Now, if I look over on the bearish side, and I've got a similar setup here, and when I call my top-down indices, this is a list of indexes, sectors, industry groups, some specialty ETFs. Look what's weak. ARC Innovation. If that's the weakest thing in the market, that is really bad for small cap growth. And Tesla. Mining, internet, robots, space exploration, broad sectors, semiconductors, solar. Well, the Qs are strong, short Qs are going to be weak. So that tells you a bunch of, that tells me a lot as well. Small cap growth looks bad. All right, so if I want to find things that might be actionable this week, there are a lot of things you could do. You could look at 1,000 charts, which I always do on Friday night or Saturday morning, but you can use the power of scanners and indicators to help make it easier. So let's go back to the bullish scanner. Let's pull up the CAT scanner. And let's bring up my weekend review list. This is a list of stocks that pass certain criteria from a top-down perspective. And there it is. It's about 2,000 stocks. And now we can dice them and slice them many different ways. So what I want to find are stocks that have had a recent reversal and now a breakout, and they have bullish momentum. Now, one of the questions I have is, well, what do I consider enough of a pullback, and how many days ago did it flip? So right here, and I was playing around, I usually look at about 9. So that's going to capture a lot of stocks that have pulled back into support and then moved up because I'm requiring positive momentum. But some of these stocks will probably have run some. First thing, notice how many 4 bullish dots I have with the scan. We don't normally see that, okay? Don't normally see that. So let's start with Allison. Now we've noticed over the last couple of weeks that automobiles have been strong, and Allison is a manufacturer of parts. And notice a breakout here from a congestion area on massive volume. So you got a volume, a breakout, a momentum dot. You recently flipped from a red to a green bongo, which has required the relative strength and the OBV straight up versus the moving averages. That's really positive. And you can see on the longer term, it's in an uptrend as well. So this is what I look for, stocks that have pulled back short term and now breaking out off of support in a longer term uptrend. AX, Axos Financials. Now this one's a lot different. Now similarly, you have the 3 dots on volume, the recently converted bongo with relative strength and OBV strong. The difference is you're well off the highs. So this is more of a buying off of a pullback, a deep pullback, almost what I call bottom fishing. But I like the performance. But I look to the left and I think there's a lot of overhead supply there. So it's not my favorite type. Coursera, I have no idea what they do. And again, if you remember back earlier in the PowerPoint, I said you had stocks that were weak that had big moves, weak by ERG, and some that were strong by ERG that had big moves. Well, these are the weak ones. Here's one that gapped up, had an EMS, massive volume. So you got gap, breakout, grab volume, breakout, momentum. Look at relative strength and OBV. But again, you're running right up into the 200, not the kind of stock that I'm typically going to look at. GFL Environment, love this picture. Love this picture. Here's your pullback to support, gap up on Friday, massive volume, 4 dots, relative strength, OBV. Again, the whole point of having a scanner and indicators that can find the type of stock you want to buy is you want to hit one button and see the stocks to go work with. Now, a lot of people are going to say, but Jeff, that had a big move. It's got 100 on the high-low. Isn't that extended? The answer is yes, and that is something to take into consideration. And we're also at a market that I think is at risk. So first, I don't buy until it takes out the prior high, because I think there's a good chance that the stock will trade sideways within the length of that bar for a couple of days. And I'm also not sure I'd be able to get a stop at a level that would work for me, which is within 8% based upon how I do my trading. Some of the others looking at this that I saw that were interesting. Republic Services. Wow. Wow. Short pullback, breakout with 4 dots, relative strength and OBV. If you like garbage, I think this is in the garbage business among other things. So there is a lot of bullish stocks here. And then kind of interesting, look at the diamonds. Okay, and I'm not saying go out and buy the diamonds. You could. Notice the diamonds had 3 dots. They had volume, breakout, momentum. But then you see the relative strength versus the spiders about the same. Maybe that doesn't mean anything. We're looking at an index. But you don't often see diamonds make it to my pullback and then breakout list here. And I think if we look far enough and hard enough, we're going to find things like the Qs as well. Now this one is a bit of a surprise, and I would not go here. You had a positive day on JKS. I wonder if they had their earnings come out. And the reason why it's a surprise is because, well, first of all, one of the prior leaders in the market, Enphase Energy, you could see it had a massive drop here on earnings. So the fact that we saw positive on JKS is surprising. Within the healthcare sector, Biogen IDEC looks like it's breaking out as well. And you could see the massive volume, the volume breakout momentum, strong relative strength OBV. And one that I like a lot as a company, I work with them time to time in the cancer space, is Regeneron. And it hasn't given me the flipped daily bongo yet, nor the relative strength. But this is one I'd put on your watch list, because here's your strong uptrend, pretty strong pullback and reversal on the week here. Now let's see if it can break out about that 17 and give me a relative strength signal. Now I don't normally just pull up my watch list, but I'm going to look at my buy list because I thought there were some interesting stocks here. You know, one caveat, it was a lot easier to find strong stocks than weak stocks. Tough to find shorting stocks this week. And sometimes that tells me the market has stretched too much, but I think there's enough reasons to be concerned. Arista Networks, this has been a long-term winner. You want to find this on pullbacks to support. So again, I haven't flipped my bongo, so it won't show up on my scan. I love that pattern, and this one looks very interesting here, taking out the 17. I'm just showing you some of my favorites. Cameco, uranium broke out here. Massive volume, relative strength and OBV picking up. Copart, a leader in the auto parts, little pullback, time to buy it after the pullback. And then I had to do a quick trip while I'm out west to Vegas for a meeting during Stagecoach. I still work for a living. And I got to tell you, Vegas is back. So my wife and I flew in yesterday, caught a show, have a meeting this morning, and could not find a restaurant that didn't have an hour and a half wait for dinner reservations. Ended up doing room service. Place is packed. And again, that tells me something. Las Vegas Sands, ready to run. All right. Win. What a beautiful time to buy. Sideways move, sitting on the 50. Volume, breakout, momentum. And how about MGM? 3 ways of playing what I'm seeing in Vegas. More people here than there were in Palm Springs with Stagecoach. So there's a bunch of what James Ropel calls candy, a bunch of stocks that look interesting to me. What's not leading the markets right now are these little small cap growth, high relative strength stocks. And let's just take a look very quickly at my list of those. This combines a couple of them, a couple of sources. Let's just see if any of these. IMAX, don't like where it closed, but it held the 17. This is one that I like the theaters. I've never owned the stock. Beautiful uptrend. Here's your pullback. Here's your reversal on the bongo, relative strength and OBV. Again, I just don't like where it closed on this candle, especially on an up day in the market. ResMed, they make pulmonary products and a medical device. Kind of a loosey chart. It did take out recent highs here. Here's your Cameco, and then one that I've owned in the past. And sometimes I get a bias when I didn't do well. But DraftKings has moved here from 10.5 to 21, so it's doubled since the end of 2022. Probably goes up with Vegas going up too. So there's some candy. There's my thought on the markets. Started James Ropel, I'm not meaning to steal your term, but there's some nice stocks to look at. I'm heading back to Stagecoach, and I hope you guys have a great day in the market on Monday. But don't forget the volatility coming with all that news. Thank you.